Hello to all traders and welcome to this month's interaction with the non-farm payrolls. Very excited to be here. This is brought to you by Orbex. And we are looking at quite a significant turnaround from the last NFP figures, which were quite detrimental. There was supposed to be almost 1 million new jobs added in the last period that we had the NFP, but they fell short at 266,000. So quite a significant drop there, to be fair. And we're going to see what's going to happen for this week, especially. The last NFP, as I said, hasn't really been favourable to the big turnaround in the economic industry for America. So we'll wait and see how that plays out for this session coming up in roughly about 30 minutes. And to make arguments both for and against Joe Biden's big infrastructure spending plan and the fiscal stimulus that he plans to inject for the rest of the year and into 2022, you could say there is a pro and a con for both scenarios. If there is a good jobs number this time, you can say that the economy is doing fine and that it doesn't need any more stimulus. And on the flip side of that coin, it can be argued that if it is a weaker jobs number this time around, it also means that they might not need to have any more spending, because obviously the stimulus checks that are going to the people that have been put on furlough or been laid off or whatever you want to call it, it is actually still working. So it can get a bit messy in these times of uncertainty, as there's supposed to be a big turnaround in the post-COVID era excuse me, but it hasn't actually worked out as much as what people thought it would. So we'll have to wait and see how that really comes about as well. Breaking free from COVID in America, they are obviously, the public are hosting more indoor let's say concerts and theaters and stuff without the use of face masks anymore. So America is getting back on its feet in that respect, but obviously the job numbers for last month did not reflect that. So that will be very interesting to see what's going to go on. So the May data should give us a few more clues to what's actually happening in the recovery at the moment. So before we begin the interaction, I just want to take you through a quick risk disclaimer. So foreign exchange trading and investment in derivatives, examples CFDs, can be highly speculative and may result in losses as well as profits. Foreign exchange derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or analysis supplied. So without further ado, let's just take a look at some of the figures that I was going through. Last month, as I say, it was quite detrimental. There was almost, as I say, a 1 million bracket there for the jobs number. So it missed expectations by quite a vast amount. So it actually basically brought the green back down to earth with a bang, and it did miss it by some expectations. But this time around, we are expecting an increase from this low number to 650,000 approximately. So anything above 600,000 would be considered quite quite a good turnaround for the American market at least. It is expected at the unemployment rate at 5.9%, and it will be the lowest since April last year. So again, quite significant for Joe Biden's first few months in charge as president. He was a president-elect in January, so it is quite significant that the first 100 days in any office that he sees quite a good long-standing job growth in the employment industry, that's for sure. So optimism is heightened after economists predict an improvement from last month's figures. This is a no-brainer. From when the 266,000 jobs were released and announced last month, there was always a speculation that it would actually be a greater jobs number this time around. So very positive data at the moment. Wages are expected to have grown from last month at 0.2. This is always around the 0.2, 0.3. It did get up to 0.7 in the months before, but we're not expecting something over 1% at the moment, but still a slow but steady increase there. And also jobless claims, the weekly jobless claims, they are crashing downwards at a heavy rate. they were lingering at the $1 million, sorry, $1 million, 1 million level. So I've got dollars in my brain, 1 million level for the vast majority of 2020. And now we're slowly coming under the 500,000 mark, and now under the 400,000. But we'll take a look at those figures shortly. And ADP figures also beat expectations very vastly as well. Just want to show you this chart from the big turnaround that we saw. So this was the one of the record jobs growth when the first wave of the pandemic started to recover. This was in the middle of last year, and then we saw the detrimental downturn of the second wave, and now we are slowly but steadily trying to start puncturing the ceiling there. This was the downturn that was not expected to happen at 266,000. So, you know, if it was at 978,000, the figure would be here and then slowly creeping up to that perfect 1 million mark. But unfortunately, it did take a little bit of a hit, which was quite unfortunate there. So we'll just wait and see what these figures are and what we have in store. So like I said, unemployment claims dropped to 385,000 this week. Just wanted to put it on a chart for you just to see the very, very, well, vast trend that's really falling under. So this was the 1 million mark where, you know, up to the beginning of 2021, it did have a threat to pierce this handle once more. But as you can see, slowly but steady, it has actually started to fall lower and lower. And, you know, we're now under the magical 400,000 handle, which is quite significant as well. So you have to say the economy is getting back on track, but there probably will be some speed bumps along the way. This level actually caps the lowest since March 2020, when the pandemic first hit the economy as well. Private businesses saw the fastest pace of job creation, so ADP numbers very, very significant there. Annual inflation rate in the US increased to 4.2% in April as well. So looking at this inflation chart as well that I wanted to point out, we did actually dip to almost 0% in 2020. And now as you can see, a very vast but steady inflation heightening there above 4% now. So what does this mean for the economy? Well, a lot of people are worrying over inflation because of the obvious reasons, but it can actually be a good thing because it could see that the American economy is actually getting back on track. So very, very significant there as well. And at the highest reading since September 2008. So, you know, a jump in these material costs coupled with supply constraints are pushing producer prices up, and some companies are passing those costs on to their clients. So naturally, if things cost a lot more in the economy to manufacture and produce, that falls on to the customer or the consumer, and they will actually obviously feel that in their pockets. But at the moment, you know, it is actually, as I said, the first 100 days for President Biden is going quite smoothly. He is obviously overturning a few of the previous president's tariffs and things that he signed, but you know, it's a slow and steady race. He's got at least another 3 years in the job, in the office, so we'll see where that goes. So things we like to look at on the NFP are the lagging and leading indicators. So lagging, we've got, you know, ISM data, challenger job cuts and jobless claims, which I've just mentioned, ADP as well we go through, and consumer confidence, you know, University of Michigan as well, very, very significant, been going since 1966 approximately. It does have quite a heavy impact on, you know, consumer confidence as well as the CCI. So it's just a case of what America is really planning on at the moment, and if it's going to start getting back on its feet anytime soon. Leading, you know, we've got treasury yields and equities. Equities are continuing in the past few months to hit record highs. They obviously have been taking slight retracements every now and again. Obviously nothing can surge forever, but it is on the right track as well to keep on pushing for record highs. And we'll look at some of the stocks later in the presentation just to give you a bit of a clue and a bit of a, you know, a determination on where things could be going. Crude oil as well, you know, above the $68 margin at the moment. If you think back to a year ago when it was in negative territory, it's actually gone a long way from that to be back up above $50 at least, never mind $60 and pushing for $70 at the moment. So these are the things that we're looking at as we go along. So just looking at the indicator lists as well. So the last few sessions we've had mainly the blue are the pros. We've had mainly pros for the leading and lagging indicators as well. So, ISM has been up this week. Challenger job cuts have been slightly lower, but not too much in the face of a big detrimental downturn. It's only a couple of thousand off. Jobless claims, as I said, 385k. Very significant there. The previous was above 400,000. It even beat the forecast, which is quite significant as well, 390,000. Okay, it's only 5,000 difference, but still the fact that it keeps on dropping is quite significant. It'll be, because these are weekly jobless claims, there is going to probably be a moment where it is going to spike up, unfortunately, because it obviously can't keep dropping down to zero, forever. So we'll wait and see what the markets will react when that happens. We've also got, as I said, the ADP non-farm employment, almost 1 million, very significant there. University of Michigan consumer sentiment, as I said, been going around for almost 80 years now. And it's very significant with the consumer confidence. So these two are kind of playing off each other at the moment. So not too much in the way of divergences from the forecasted to the actual data. So we'll have to wait and see. Core retail sales were quite significant though, actually, because it was muted on the last round of data at 0%, even though the previous was over 10%. So with more shops and retail businesses opening across the country and across the globe, actually, then we were expecting a bit more of a shift to the upside for the core retail sales. So that was quite a surprising detail there when the data was put out. But we'll wait and see what happens with that for this time around. But as I said, people getting more stimulus checks and obviously more people back at work. So you have to think that the retail figure will actually climb. Treasury yields slightly down. Equities and crude oil are up. As I said, equities having a little bit of a topsy-turvy run, a little bit messy at the moment, but in the long run, we're looking at they are still bid and they are still progressive. Crude oil as well. The last time I looked at it, it's slightly up for the day, but as I said, if it doesn't get to $70, then we could be seeing a bit of a reversal there. But it'll be interesting to see how oil will be affected with the American job numbers as well going into it. So choosing the best pair to trade, we just take a look at what's in store for the current rate for a lot of the main Forex countries there. You've got US, Eurozone, you've got United Kingdom that are verging on negative territory as well. Switzerland is still in negative territory, have been for quite a while. So, we just look at the interest rate differentials to see what the best pair is. This is basically just a currency strength reading for the last 10 minutes just before I went live on air. And we're looking at the pound and dollar and Aussie yen being quite significantly, bullish, more than what the euro is at the moment at least. So we're just seeing what's going to happen when the figures are released. Obviously, the dollar has been quite strong over the euro in the past 48 hours. As I said, we've got ISM figures, PMI, and also weekly job claims as well that have really, and ADP that have really started puncturing the euro dollar. Euro dollar is actually flirting at the 121 handle at the moment. So we'll see how that is going to, as I say, be affected shortly with the data coming out. So just a few things that I like to go over about risk capital and how to protect it, what to look out for, what not to do. Obviously, it's your own personal taste how you trade, if you want to trade on during high impact news events, or if you just want to let the storm ride out and not even trade on a Friday. Friday there can be quite interesting and big developments in Canada and America coming out with employment and also just in general retail sales as well, inflation rates. So with this being said, it depends on what kind of trade you are, but just a few things to go over in the meantime. So avoid trading during NFP as volatility is high and the whipsaw effect could lead to losses and exceeding profits as well. So this is just basically, like I just said, avoid trading during the NFP because volatility could be very difficult to judge. If you put, even if you put in a pending order, so you might put a pending order in here for a buy stop, the news is released, the next available price is here, so it's going to jump from here to here, bypassing your buy stop position or take profit or stop loss, whatever you've put in, and then the next available price will be hit. So you're missing out on that kind of slippage, because obviously if there's no price in the market at the price that you've given for your trade, then how can it be closed at that price if that price does not exist? So it will close at the next available price in the market, which will be up here, and that could be either positive for your trade, depending if it's a buy or a sell, or it could actually be detrimental. So just something to keep in mind when trading on high impact news events. Number two, apply protective stop loss and take profit risk management measures in order to bypass emotional hurdles. So this is just basically 101 when trading in general. So you just want to make sure that your stop losses and take profits are, in the market, to make sure that if you do make a loss, unfortunately, that the loss can be closed out and your risk capital does not have to be really, really hindered at that moment in time. So, you bypass these emotional hurdles where you might think, oh, let me wait for the market to go back up or go back down, depending if you've got a buy or a sell position. And obviously, if the market keeps going against you, then obviously, you're going to lose more than what you bargained for. So to apply those stop losses and take profits, be happy with a stop loss and also be happy with a take profit, and just to make sure that you are achieving your goals as well. So 3, close out all positions, if any, ahead of the release in an attempt to divert from high volatility and range risks. So if you just want to get out of the market to avoid any possibilities that the market might go crazy, just close out all positions and make sure they're closed on your trading terminal as well. So if you're using an MT4 or an MT5 platform, at the bottom of the terminal, make sure there are no trades open under your trade tab. Which is most important. I mean, when I was starting out trading, there was a lot of people going on the wrong tab because of the few different tabs on the MT4 and MT5 platforms. So we're making sure that you're on the right tab, you can see the trades if there are any, and we can go, you can definitely make sure that all trades are closed out. Hedge your positions, if any, ahead of the release in case your risk is minimum because you trade long term and the stop loss is far away from being hit. So hedging can be a very profitable and safe type of trading, but at the same time you have to make sure that you're hedging correctly. If you're heavy on one side and light on the other side, then make sure that you are keeping an eye on the market to make sure it doesn't go into that vice versa effect and your trade gets into a loss, which is something that you don't want to happen. Number 5, if you are eager to trade despite the warnings, do let the markets calm down before entering a trade. That way you circumvent the heated environment and also have a clear picture as to where the markets could be heading towards as market noise is reduced. So this is just basically, with a high impact news event like the NFP or any high impact news event, there could be ripple effects after the news has actually been released, up to maybe 1 or 2 hours after, because we always seem to get retracements after a big move. Say if the market moves like 50 to 80 pips, there is also always the possibility of a retracement. And if you want to steer clear of any possible whipsaw effects or volatility in the market, then it's best to let the market completely calm down before entering that trade. So it just kind of takes that extra risk factor away as well. And some traders after the NFP, they like to start their weekends early. So Friday evenings after the NFP, it is a quiet time to trade as well, if you just want to practice some 1 or 2 trades to get into and get out of without having the risk factor of any further any further chance of any trades going the wrong way. The main news releases that happen during the course of the day are in the UK, European and the American sessions, and once these have kind of died down, if you're going to the early morning Chinese session, depending where you are in the world, if you're trading in the Eurozone or in Asia, if you wait for the Chinese early morning session to calm down, then usually that's when the market starts to pick up, because there's more people trading in the market, which equals more liquidity in the market and more pricing. If you look into the early hours of the morning in the Eurozone session, you'll see that there is little to no pricing on a lot of the instruments that we offer. So this is why there can be a lot of let's say dojis or dead candles or no prices at all for certain minutes in the day. So just to keep in mind that this is another small thing to look out for as well. Analyze the data post-release without supporting employment, wage and employment data, any directional trade is at risk of a reversal despite the NFP is over, and post-effectual bias depends on all three. So, you know, like I just said on number 5, you can analyze the data post-release, and you know, wages, unemployment and employment, everything that goes into the NFP or anything that goes into any high impact fundamental news event can be affected post-release as well. So this is just something to keep in mind if you want to keep trading throughout the trading day. And finally, number 7, pay attention to the divergence between actual and consensus figures. Gaps of 20 to 30 are not considered very effective. So this is just going to show that when the NFP is released, if there is a slight difference between the actual and projected figure of 20 to 30k, don't expect too much market noise or volatility. It does not mean that it is really going to start moving very much. If we see, like last time, almost 700,000 job difference between the actual and consensus, then that's why we saw quite a vast move on a lot of the dollar pairs across the board, and also in gold as well. So, you know, this is just something to keep in mind when you are looking at all, you know, taking everything into account and making sure that you are getting the best out of your trading experience as well. So, you know, thank you for so far joining me on this presentation. So I've just opened, picked a basket of currencies at the moment. I'll just bring it down on the screen just to make it a little bit clearer. So I've picked out 6 at the moment. I've got an S&P index as well that I want to look at. So, you know, I've got it all on the 30-minute trading zone at the moment, just to give you a bit more of a closer look. So I just want to bring it out on the 4-hour for euro dollar. So at the moment, as you can see, very, very detrimental downturn for the euro dollar. And this morning we were trading, just flirting past the 121 handle, which is here. It almost did a double bottom there, a little bit of a false break, but now we're slightly trading on a sideways edge, and we're just going to wait and see what the possibilities are. So the way I'm looking at it at the moment, you know, I'm not really going to put a Fibonacci in there at the moment. I'm going to just wait to see if these tops and bottoms here will get broken roughly at the 120, the lower region of the 121, and then just at the 121.35 region as well. So if these levels do break, then I'll expect another push to the upside, well, especially for the upside especially. And if not, then we'll be going to 121. I'll just see when the last time that was actually hit. So 121 at the moment. I'll just get rid of these for you so it's a little bit more clearer. These are my previous levels that I was looking at a few weeks ago. But at the 121 level, you know, we saw the last time that move down there, which was in the middle of May, and that was after quite a choppy move down and then back up again, and then we punctured that, and then it kept on pushing past the 122 handle. Now we're looking at another push to the downside, but this sharp accentuation since the end of March to push up, you know, we've gone over 500 pips there, which is quite significant. So let's see if we're looking at another leg again. So back down the 30-minute chart just to give a bit of a clearer perspective there, and we'll see what the repercussions are after the NFP results, which are just over 5 minutes away. So we'll see what's going to happen there. Pound dollar as well. Pound has been very buoyant in the last few trading sessions because, you know, we've had this big resurgence that will the plan for the UK be put into place for the roadmap out of lockdown. It's supposed to come later this month, but scientists are saying to hold off for at least another month because of this new Indian variant that is actually sweeping the UK at the moment. Well, I say sweeping the UK, it has actually been in certain parts of the UK, but the vaccinations are appearing to be working and to be steady against the virus. So, you know, the roadmap out of lockdown seems to still be in there, but we'll see if it still maintains. By that time, I'll expect a full reversal, you know, a full pretty much V-shaped reversal for for cable. So that's going up to the 142 section. But for now, we are looking at biases on the upside. I'm just looking to see what the potentials are and seeing if we're going to really start moving to another move. So if I just do a Fibonacci from the recent top to the bottom, we're just piercing the 50% now, and we're just waiting to see what can be done in the near term. So gold as well, been looking on gold for quite a long time now. It's fallen quite bearishly below the 1900 handle. It was flirting with the 1900 handle quite significantly for a lot of this week and last week. As you can see here, this is going back to last week, sorry. So as you can see, it was flirting quite a lot. It was undecided, and now it's crashed back through, and now we're looking that the bias is on the downside. But as I said, the NFP can change all that. We're just waiting to see if we're going to have another leg lower through this 1860, 1859 handle. And if we do, then I'll expect, these certain, I just put these levels in here at $10 a piece, excuse me, to see where the opportunities are. I believe if we crash through this area, then I'll be looking at the 1840 handle for a nice sell position in the near term. So just something to look out for. Then on the upside, however, a move back to 1900 is on the cards as well if the if everything can go its way, and the safe haven is heightened and a commodity of choice. Dollar yen as well, we're looking now, it's a bit of a role reversal to the euro dollar at the moment. We've had this sharp upturn, having a sideways trend at the moment, finding direction. But as I said, if we can get a little bit like gold, if we can get through these levels here where we find a little bit of support, roughly about the 110, then I'll be expecting another drop down to previous lows, roughly about a 20 pip drop, and that's just in the median session as well. Dow, just wanted to pick up on an index at least. We're just looking at this choppy consolidation for Dow. We've had quite an accentuation in the last few trading sessions, and now we're just seeing if it's going to pick up any more. On the 4-hour chart, as you can see, it is striving for these record highs once again. We can go on weekly, it's trying to push for that record high once again. I'll bring the S&P up as well in a second, just to show the opportunities there. Just a couple of minutes before the NFP is announced. So again, S&P, it is trying to push and puncture these record highs. Stocks are taking their toll when the dollar is doing well. We've had the dollar index as well, which is on very, very low coordination as well, which is quite significant. The more physical spending that's done, the more of a battering the DXY index is getting. So very significant there for the S&P and the Dow. Tech stocks are up, very, very significant as well, going into the second quarter, or ending the second quarter of 2021 and going into the third quarter as well. Market's just starting to give a little bit of a noise at the moment, just a couple of minutes to go until the data is released. Just getting my information ready as well, my alerts, just to keep in track. Obviously, what kind of NFP would this be if I didn't know what the results would be as well? So we're just waiting to see what's going on. So dollar CAD as well. Usually when we get when the NFP is going, we have Canadian news such as employment change and unemployment rates as well. So again, just looking to see what the opportunities are here. Dollar CAD really looking on a push, but dollar has the greenback has been really buoyant in the last few trading sessions. So as you can see, we could look at a reversal like the euro dollar, a vice versa reversal. And if we do get right down to these levels, then the 121 is quite a significant psychological barrier, and once that's broken, then there is no end to where we can probably go. I'll be looking roughly, we could be looking for a 60-70 pip drop in the near term, back down to weekly lows. So just something to look out for there. So again, just waiting to see what we're dealing with at the moment, as the data will come through shortly. So just waiting to see what the results will be. Any minute now we should start seeing a little bit of a fluctuation in prices. So we've got euro dollar, just waiting to see what's going to happen now. So we're going to the upside. Dollar yen is falling quite significantly. So cable, we're looking for that 61.8. It has touched it. Are we going to get a little bit of resistance there? It has actually punctured through that, so we'll see if how far that can keep going. Possibly up to the 78.6 as well. So just getting the news in now and the alerts. So it increased by 559,000 jobs, so quite significant. We didn't get that 600,000 mark, which is probably what we were looking for to show that the jobs market was really, really buoyant. You know, if we go back to the presentation, we had that steady incline, and then obviously with the 266,000 jobs for last month, we had that decline. And I think, you know, the jobs numbers wanted to go up in a very steady rate to what it was doing at the time. So as you can see, that this is probably why we're having a little bit of a weak dollar at the moment. So we'll see what the opportunities are. So cable, like I said, it has punctured the 61.8. I'll be looking now to see if it gets to the next zone, roughly about the 76-78% handle, which is roughly about where it is, maybe a little bit higher. Dollar CAD, not really looking too much in the way of things that we can sink our teeth into. The US employment rate dropped to 5.8%, the lowest since March 2020, and below 5.9%. So not really too significant for the unemployment rate there. No big surprises in that respect. Is probably why we're seeing a little bit of weakness in the dollar at the moment. So it hasn't really gone as far as what we probably would have done. You know, last month we had a very high expectations at almost 1 million jobs added. So if you think 266 at 599,000, you're looking at roughly just over 250,000 jobs added. So from last month, so you know, the difference. Sorry, so you can't really say it's something to shout about. Gold, on the other hand, is pushing up. As I said, that 1900 handle is not out of the way in respect for the end of the day. You know, we've only got another $20. If you think that it's just jumped almost $10 there from when the NFP was released, we can safely say that another, you know, $10-20 by the end of the trading session is actually quite significant, and it can be done. Just looking at the Canadian employment as well. Unemployment rate for Canada is up at 8.2%, so it's roughly along the same rate as what the expectations were. So that's why we're seeing a little bit, not too much of a dip. You know, the market has moved slightly, but if you think about it, it's gone 25 pips. Not too much in the way of something to really get excited about. Dollar yen starting to get a little bit of retracement. Will we get a full retracement? We'll have to wait and see. Looking at about 23 pips there as well. Euro dollar has punctured this 121.35 handle. So now, as I said, if we can keep momentum, then there's no end in sight for the recovery that we saw, that we could possibly see, but it has another 30 pips to go. Usually the market noise is on the first few minutes of the NFP release, so we'll have to wait and see how that's going to play out as well. Dollar yen, as I said, slight retracement. Let's look at the S&P again. So I've got it on a daily chart, so there you go. The stocks are up as well. It's probably same as the Dow. Looking at that on the daily chart as well, there you go. Pretty much the same chart on the upside. So again, looking for to test these recent peaks, especially for the Dow at 34,000. Very significant number there. Very psychological confluence level there, and the S&P as well. Looking to get those recent ones as well. So we'll just wait and see what's going to happen. And yes, so very, you know, you could say it's not a bad jobs report, but in the grand scheme of things, it could have been slightly better, and we'll wait and see what happens in the next few minutes ahead. So dollar yen still falling lower. As I said, just looking at this previous peak here, we've spiked through it. If we can break through it and hold it, I'll expect another move down, move lower as well. So we'll just wait and see what happens with that as well. To the downside at least, you know, this was quite a big false break, so I'm not really expecting anything to get down to here. I will mark it on the chart just for reference, but not really looking to probably break that. We've already dropped, you know, just over 30 pips, so we'll wait and see. The thing is with the NFP now as well, you have to take in mind that it's not really the performer that we saw a few years ago. With the NFP, we had like 50 to 80, 90 pip moves on the news release. Now we're just seeing probably 30 to 40 pips, so it's something to keep in mind when we don't get such a great jobs report as well. So now we're just seeing a few retracements on the 30-minute candles. I like to use 30-minute candles because it gives me just that, you know, that near term but not too far away. So it's just a personal preference. Obviously yours can be different. You can take it into 5 minutes or 10 or 15 minutes or whatever you want. You know, if you look at a 15-minute chart, it's a little bit more progressive than a 30-minute chart, because you're only seeing the you're already seeing what's happening in the near term, but the 30-minute chart works a little bit better for me. So we'll just keep on looking at what the potentials are. I'll just keep looking and to see if there's anything that we can pick up on for the next few minutes as we go into the back end of the presentation. Later on today as well, in roughly just over an hour, we've got the IV for the IV PMI for Canada as well. This will be very significant for the dollar CAD. You know, the pace of job creation did slow down quite significantly in Canada, and if you're looking to trade the loonie, which is, you know, obviously a heavy commodity currency as well, you know, Canada does distribute and export quite a lot of oil, so this is quite significant as well, looking into it. Just as I say, with the NFP day, if you see any other potential news releases that can happen at the time, then, you know, you have to wait and see if there's potential there or opportunities there. There's always an opportunity every time there's a big news release, but how much of an opportunity, you know, it remains to be seen. That's up to yourself and how to manage that. But obviously here at Orbex, we are always available and to answer any questions. This video presentation will be going up on our YouTube blog as well, so any comments or queries that you would like to ask on that, then feel free. We are always on hand to help out as well with any questions. So just looking into the first 10 minutes of the post data, and it's the time now where things are kind of slowing down a little bit. Like I said on the presentation, if you're waiting for the post data noise to calm down, then, you know, wait at least until 30 minutes after, and then see if there is any more ripple effects. If there isn't, then obviously it is safe to enter a trade, obviously keeping your stop losses and take profits intact as well. So this is something that you can obviously do and see as I look on all my screens to see if I'm missing any data whatsoever. So no big surprises at the moment. We did think it would be a bigger job, let's say bigger employment count or number than last month. However, getting over that 60,000 handle, it just made it slightly you know, slightly down on the jobs picture, and we're just waiting to see what those what the repercussions are. So, you know, the possibility of a strong month of growth can obviously lead the way for what stocks to buy, and obviously how much infrastructure spending Joe Biden might or might not have in his final say. There are ripple effects that stocks are likely to reach new highs this month alone. But the extent of market gains depends on how much the inflation looms, and how, as I said, it's over 4% at the moment in America, so it's quite significant. And obviously you have to factor in the months of the year. Usually it would be the summer vacation period coming up for a lot of people, a lot of investors as well, but will they be taking those vacations? We'll have to wait and see. June, July, August is are quite predominant months for these for investing in general, so you have to take that into account as well. And obviously with people hiring employers as well, employers hiring employees as well, so it's very, very significant. You have to think of the S&P. I just go back to that. It started off quite significantly at the beginning of this month, as you can see, 1st of June there, but then we started to plummet downwards, so it's quite significant there. It was 1% off its all-time high until it started collapsing quite significantly, so just things to take into consideration when we're looking. So cable still bouncing above the 61.8, which is quite significant to the upside. We could probably get to the previous top by the end of the trading session, roughly about another 30 to 35 pips, which isn't out of the question there. And as I said before, the dollar yen giving me this false break here. You could say it's a false break at the moment, but we'll just see how much further it has to go down and how much it's going to start plummeting as well. So we're just waiting to see for the next round of data. Let's say, you've got the Fed having a meeting on the 15th and 16th of June, so that could be quite significant for where inflation stands, for where monetary policy stands, and for where the next jobs report is coming from. Where obviously when the jobs forecast is getting made, the closer and closer it gets to the NFP date or any employment date, these certain factors like the Fed or government speakers. In Europe we have the ECB board that determine what could be projected for the next month, and it's the same with the American market with the Federal Reserve meetings as well. Inflation can be a double-edged sword for certain stocks as well. If inflation goes up, then the company could pass the costs on to its customers, who are they willing to still pay for these products and items being distributed by the companies. But if inflation gets a little bit too high, it can eat away at some profit margins as well. So just certain things to look into when inflation is being taken on board, because it's quite a significant headline for the last 6 months, or probably longer, since the pandemic really kicked in. So just as we enter the last section of the NFP presentation, just want to have a quick look at what the opportunities will be. So as I said, cable is holding its own just above the 61.8, roughly at the 141.55, 56 level. It's roughly about 8 to 10 pips away at the moment. Could easily drop below that. If it does, we could look at further retracement back down to the 50% at least, I would say. But if it holds above, then we are looking probably quite bullish, quite buoyant on cable. And the same with euro dollar as well. At the last, as I said, this last projected line that I put in at the 121.34, 35 mark, again, we're looking to see if it can hold its own above that mark and how far it can push. As I said, let me just bring this out a little bit more. So we've had this kind of spike here at the 125, 58, 60 section. I'll be looking to see if it can fully retrace at the 121.90. It is still quite a way off, roughly about 40 to 50 pips, but nothing is out of the question, as the ripple effects might not calm down just yet for these dollar currencies. Gold as well, as you can see here, I'll just bring it down to the 5-minute chart when the news was released. Very, very choppy, but maintaining its own above the 1880 handle at the moment and pushing higher. So we'll just wait and see what the opportunities are for gold. I'll be looking to see for next week, especially if we can really start pushing for this 1900 handle and looking very, very buoyant there. On the flip side of that though, if the safe haven demand falters for this yellow metal, we could see weekly reversals as well. It's all about getting over that 1900 handle for me and maintaining its growth in that respect as well. So just a few things to look out for gold, and not only for gold, for silver as well. You know, the metal market has been extremely volatile in the last few months. We saw what happened with silver a few months ago with people buying it out of nowhere, and obviously the decline that came with it afterwards as well. So just something to keep in mind if that does flare up again. Dollar yen, it is still looking progressively on the downside, just waiting to see if it can maintain this push below the 109.80. It's only a few pips away, a few breadcrumbs away. So, you know, we're just waiting. I'll be waiting for the rest of the trading session to see if it's going to start falling lower. As I said, I don't expect it to fall any lower than the 109.60 handle. I believe this was a bit of a false break, but you know, as we get onto the trading session, into the American session now, we'll see if that's going to start taking its toll as well. On the Dow and on the S&P as well, just waiting to see what the, sorry, that's the S&P. Yep. So just waiting to see what the opportunities are. We are seeing a little bit of a retracement now, but as I said, it is still looking quite bullish to me, and we could have another revisit roughly about the 4,210 handle there, which is quite significant. So we are looking for stocks to start picking up. Obviously the S&P is very heavy with a lot of stocks, Tesla being one of them. That didn't have very good sales figures today. If you look on the Stockwatch video that I did earlier today, we are seeing that it missed its expectations of sales in China. And whereas China are really trying to push the electric vehicle market, if Tesla doesn't take off there or has a hindrance there, then this could affect the company and also affect the S&P 500 as well, as the S&P did actually just allow Tesla on the index in the last few months. So just something to take into consideration there as well. And with the Dow, just put on the 4-hour chart at the moment, it has got a little bit of a way to go before reaching, I would even say, this level here, because I believe this is a bit of a false break as well. So you're looking at the 34,700. We're just about 50 odd points away from that. So it's not out of the question yet. And we'll see what the consequences are with the NFP for that as well. And finally, just in closing with the dollar CAD, as I said, in just over 1 hour, we have the PMI IV for Canada as well. So that could shake things up on the Canadian markets. We've pierced this 121 handle at the moment. I'm expecting, if it can keep in the regions here of the high 120 region, then there's no reason why it can't actually do a full retracement from previous sessions. You know, this was only earlier this week that it was at the 120 handle. At the lower 120 handle, and now we're looking to see if it's actually going to bring it back down to these levels as well. So just a few things to keep in mind as I said, as closing the presentation now. So as I said, with the slight tips for the invested capital that you might have put into the NFP, just make sure that you are always having your stop losses and take profits intact, and also making sure that if you're not planning to trade high impact news events, then you know, avoid the NFP at all costs. Because as I said, you know, let's just take a look on the minute chart. Within the first minute, we've had a jump of almost 30 pips, and even though this is a filled-in candle, it doesn't mean that every price was hit along the way. So what do I mean by that? Well, this is where it was, where the euro dollar was before the NFP. On the first available price, it could be here. So if you had a if you had a buy stop or any sort of pending order here, then the first available price would be here. This price would be cancelled, and then your trade would have opened or closed here at the first available price. So just a few things to look out for when you're trading high impact news events. You know, slippage, price gaps, they can happen. It isn't unusual in the market. So just something to contemplate when you're looking into these these candles that appear to be filled, but they don't have every single price increment inside the candle. So that's just something to look out for in the short term once you're trading. So that's all from this edition of the NFP. As I said, just keep an eye on the markets that you're trading on, the currencies or instruments or any asset that you're trading on, and this will give you a lot more benefit and a lot more bang for your buck, let's say, when you are really wanting to step into this area of high impact news trading. And obviously, you know, if you're a scalper, if you're hedging, if you're just trading on these news events, then it can all work out for you. Just have to be careful on what you want to do and how you want to trade. So that's all from me for this time around. Thank you very much for joining me. As I said, this video will be posted on YouTube, and any comments or queries that you'd like to add on the video, please feel free and I'll get back to you as soon as possible. So have a great rest of the trading day. Have a great weekend ahead, and I'll catch you next time. Bye for now.